everyone, ready to dive deep into what's next for payments. We're breaking down the BCG 2024 Global Payments Report today.
It's packed with insights.
It really is. Whether you're prepping for that big meeting, want to stay ahead of the game, or just love geeking out on this stuff, this deep dive is for you.
What's cool about this report is it's not just about the numbers.
Yeah.
It's about seeing where the whole industry is going and how to make sure you're a part of it.
Exactly. Okay, big picture. Slower growth in those boom years, a new focus on profitability, and those huge tech shifts coming up, AI, digital currencies, we're covering it all.
And banks are really feeling the heat from all these fintechs. They're having to reinvent themselves big time.
Okay, so let's start with the growth slowdown. The report says global payments revenue will reach $2.3 trillion by 2028.
Wow.
Not exactly a dying industry.
Right. But it is definitely slowing down.
Okay.
From 9% annual growth down to 5% by 2028.
So is it just that everyone who's going to go digital already has?
That's a big part of it. The report calls it the peak cash to digital shift. A lot of markets have already seen most of that happen. Plus, macroeconomic factors we keep hearing about, like lower inflation, interest rates, all that's cutting into some revenue streams.
Right. But there's this interesting detail. The report actually predicts some regions will see really good growth, even double-digit growth in transaction revenues. We're talking Latin America, the Middle East, and Africa.
Think about it. Those regions are still catching up on adopting digital payments. So lots of room to grow.
Yeah, so if you're looking for opportunity, that's the spot to be.
Exactly.
Now let's talk about investors. It used to be that big growth was all they cared about, but the report's saying things are changing.
Definitely. Investors are a lot more demanding now. They're not just throwing money at anything that's growing fast. A third of the industry's investors are now, they call value-focused.
Value-focused. What does that mean for payments companies? What are they actually looking for?
Profitability. It's not enough to just grow. Got to show you can turn that growth into actual cash. Buybacks, dividends, things that show a return.
So a wake-up call for those companies that weren't prioritizing a sustainable business.
Exactly.
It's not just about growth at any cost anymore.
Right, and that leads into how much pressure banks are facing from fintechs.
Oh, yeah, those fintechs. They're like speedboats zipping around those big bank tankers.
It's a good one.
The report says banks need to find at least half of their new growth outside of their core offerings.
It's true. They need to get creative. Can't just rely on those traditional services anymore. Need to explore stuff like embedded payments, where financial services are built right into other platforms.
So partnering with the fintechs that they see as competition.
Exactly. Not about beating them, it's about joining up. Also look at acquisitions, bringing in new capabilities. It's all about evolving.
So it's not just fintechs they got to adapt to, right? What about instant payments? Over 60 countries have these systems up and running.
Huge deal, this one. And it affects you directly, you know, sending money to a friend, buying online, paying a bill. Yeah. It's got to be instant.
Right.
That's the new normal.
Yeah. And it's happening globally. The report highlights some really cool examples. Brazil's KIX system and India's UPI.
Oh, yeah. Those have seen amazing adoption rates.
It's amazing.
And they're not just fast, they're super user-friendly. That's a big lesson for any country trying to do instant payments. Got to make it easy.
Yeah.
Or people won't use it.
Yeah, makes sense. Even those giant card networks, the ones that have been dominant for so long, they're having to adapt to this instant thing.
Yeah, it's a whole new game.
Okay, let's talk tech modernization.
Yeah.
It's not just about adding more tech, it's about the right tech. The report talks about a modern payments architecture. What's that actually look like?
Think of it like building with Legos. Instead of one big clunky thing, you've got these smaller pieces, easy to snap together, reconfigure. That's how you get flexibility and integration.
Gotcha. So a modular system.
Yep.
And the report also really stresses cloud-based.
The cloud is key for scalability and being flexible. Lets companies adapt fast to whatever's changing and use those new technologies we're talking about.
Right. The report talks about some pretty big benefits to this modernization thing.
Oh, yeah, for sure. Better unit economics, faster innovation, and a much deeper, more personalized experience for your customers.
Okay, let's get to the tech that everyone's buzzing about.
Yeah.
Generative AI.
Oh, yeah.
The report's saying it's a potential gold mine for payments, but a lot of companies are hesitant.
There is a lot of uncertainty with AI, yeah.
Right.
Companies are worried about the return on investment, the costs up front, whether they even have the right people to use it right.
So they're kind of frozen.
Some of them, yeah. But the report also shows companies that are already getting huge returns on their AI investments.
Really?
Klarna, for example, they're using AI to automate a big chunk of their customer service, expecting to save $40 million in 2024 alone.
40 million! That's wild. And Stripe's using AI to make their tools super user-friendly for developers, which is smart.
Yeah, bringing in tons of developers to their platform.
So these are just two examples, but the takeaway seems clear. The longer you wait on AI, the further behind you'll be.
The gap will just get bigger.
So it's risky to not invest.
Absolutely.
Now, switching gears to digital currencies. We've got Bitcoins, stablecoins, CBDCs. It's a lot to keep track of.
Yeah, it is.
For payments, it seems like stablecoins and CBDCs are the ones to watch.
For sure. Stablecoins offer the potential for faster, cheaper cross-border payments, while CBDCs could totally change how we use money every day.
And get this, over 90% of central banks are developing their own CBDCs.
It's true. The potential is huge, but there are definitely hurdles.
Like what? What needs to happen before we're paying for coffee with digital yuan or dollars?
Well, there are questions about how these systems will be built, how to make sure the user experience is smooth and secure,
Right.
and how to make all these different currencies and platforms actually work together. Oh, and then there's the big one, regulation.
So lots to figure out before digital currencies go mainstream.
There is, but it's moving quickly.
Okay.
This is definitely a space to watch. Could change how we think about money completely.
Now, on to risk and compliance. Payments are getting more and more scrutiny from regulators, and failing is more costly than ever.
Absolutely. No cutting corners here. The report emphasizes the need for a holistic way to manage risk.
Okay, break that down for us. What does that mean in the real world?
Having a clear strategy, a detailed breakdown of all the risks you might face,
Okay.
an engaged board, and a culture of compliance baked into the whole company.
So not just checking boxes.
Not at all. It's about building that foundation of trust, security, protecting your business and your customers in a world that's constantly changing. Yeah, you're right.
Before the break, we were talking about risk and compliance. It's easy to get caught up in all the exciting new technology and kind of forget about the basic.
Right, the things that keep everything running smoothly and securely.
And with all this innovation, it's even more important to have that solid risk management in place. The report actually points out that payments companies, especially newer ones, often aren't as good at risk management as banks.
Oh, that's a great point. A lot of companies only focus on the most obvious risks, the things they've seen in the news lately. But that kind of approach leaves you wide open to new threats you haven't even thought about.
So it's like waiting for a fire to start before you even think about getting a fire extinguisher.
Exactly. The report really pushes for a comprehensive risk taxonomy.
Okay.
It's basically about looking at the bigger picture of risks and identifying all those possible threats: financial, operational, regulatory, reputational, everything.
The report even has this visual risk map that breaks down different types of risks.
Yeah, it's really helpful.
It's a great tool for companies to use, like a checklist so you know you're not missing anything.
And it's not just about knowing what the risks are, it's about having a system to manage them. A holistic approach, as the report puts it.
Okay, I like that. What does holistic risk management look like in the real world?
Well, you got to have a clear strategy. Defining your risk appetite, knowing how much risk you're willing to take,
Okay.
and who's responsible for managing those risks.
So it's not just reacting when something goes wrong, it's about being prepared.
Exactly.
Yeah.
Making risk management part of how the company operates, how decisions are made.
The report also mentions the importance of the board being involved. Why is that?
The board has to oversee everything. They're involved in creating the risk strategy and making sure it's actually put into practice.
So it's about good governance, making sure the company is protected in the long run.
Right. That strong risk culture starts from the top down.
And speaking of protecting the company, the report's clear that you need to invest in risk management.
Yeah. It's not just an extra expense.
It's tempting to think of it that way, but the report argues that investing in risk management now is a lot cheaper than dealing with a major risk event later.
It's like insurance. Might not need it every day, but when you do...
You're glad you have it.
Exactly.
The report also talks about regular reviews and assessments.
Super important. This is how you make sure your risk management keeps up with all the changes happening. Think of it like a checkup. Got to review your risks, see how your controls are doing, and look out for any new threats.
So always be improving, not just set it and forget it.
Right. Things change all the time in payment, so your approach to risk needs to change too.
Okay, so we've talked about a lot, the slowing growth, Investors getting more demanding, banks needing to change, those instant payments, the potential of AI, digital currencies, and how crucial good risk management is.
It's a lot. But there's this big idea that connects everything. The future belongs to the companies who aren't afraid to change.
I like that. It's not enough to just keep up. Got to be the ones making the change happen.
Exactly. The winners will be the ones who are willing to take risks, try new things, experiment, adapt to whatever their customers need.
They have to think ahead.
Exactly. And that's what makes this so exciting. We're seeing the payments industry transform right in front of us. Huge opportunities for those who go for it.
Now, in the last part of our deep dive, we'll look at the specific things the report recommends companies should do to not just survive, but really thrive in this changing world.
We'll talk about how companies can adapt how they do business, use technology strategically, and make sure they have the right people and culture for success.
So stay with us. We'll be right back. We're back, ready to wrap up our deep dive into the future of payments. We've talked about the challenges and the big opportunities, but let's get down to brass tacks. What can you actually do to make it in this world?
Right. That's the big question. The good news is the BCG report doesn't just point out problems. It's given them real solutions too.
Oh, good.
They boil down to three things: adapting your business model, using technology the right way, and having the right people and company culture.
Okay, let's break those down. Adapting business models first. What kind of changes are we talking?
Think diversification. Can't rely on just one way to make money anymore. You got to explore new things, new markets, come up with products and services that your customers actually want and need.
Don't put all your eggs in one basket. Got it. But how does that actually work? What are some examples?
Take banks. They got to be more than just banks these days.
Yeah.
They could get deeper into embedded payments, team up with fintechs to offer specialized stuff, maybe even buy other companies to get better at cross-border payments or real-time processing.
So those fintechs that are giving them a run for their money could be partners.
Exactly. Got to ride the wave, not fight it. And for payment companies that aren't banks, it's all about standing out. How do you do that in a crowded market?
Yeah, good question. Must be tough for a lot of them.
It is, but it's possible. They could focus on specific industries,
Yeah.
offer more than just basic payment processing, maybe use data to give customers personalized stuff.
Find your strengths, your niche.
Exactly. Go from just processing payments to being a real partner that helps businesses succeed.
Okay, that makes sense. Now, the tech part. We talked about modernization, but the report goes deeper than just having the tech.
Right.
It's about using it, right?
You got it. The report is all about that modular cloud-based approach.
Yeah.
Break down those old systems into smaller pieces that are easier to work with, easier to update, like building blocks.
I like that. And the cloud's crucial for being able to scale and adapt.
Absolutely. Faster innovation, better response to what customers need, and easier to integrate AI and machine learning, all that good stuff.
Sounds like the report's got a clear plan for companies to modernize.
It does. Starts with figuring out what you want the end result to be, making a detailed plan, focusing your investments, and making sure you have the skills you need.
It's about the vision.
And the strategy, yeah. And it's not just about the tech itself.
Right, the people are important too.
Huge. You got to have the right people, the right culture for all this to work. People who can keep up with this industry and want to be innovative.
So a company where people feel like they can try new things, push the boundaries.
Exactly. That's what separates the winners from the rest. The right tech, the right people, the right culture.
Okay, so as we wrap up this deep dive, what's the one thing you want our listener to remember?
The payments world is changing fast. The old ways won't work anymore. To succeed, you got to be ready to embrace change, adapt your business, use technology strategically, and build a culture that's all about innovation.
The companies that do that will be the ones shaping the future.
Exactly. They'll be the ones making new things possible, unlocking new value, changing how we all use money.
It's an exciting time to be in payments.
For sure.
So what role will you play? Something to think about. Thanks for joining us for this deep dive. We hope you found it useful and gave you some ideas to take action along.